Welcome to Capital Gains, Yahoo Finance's unique look at how U.S. government policy could impact your bottom line. I'm your host, Madison Mills. This week, it's all about tariffs, on hold at the moment for Canada and Mexico, but negotiations still ongoing. President Trump did place a 10% tariff on all imported goods coming from China, which retaliated with their own set of tariffs. Is this the beginning of a trade war, and how could these tariffs impact your finances? We will unpack all that and more with Asia Society Policy Institute Vice President Wendy Cutler. But before we get into it, let me introduce my co-stars, Rick Newman and Ben Werschkul. Hello, Rick and Ben.
Hey. Hey there.
Hi, guys. So, Ben, let's get to it. What's on your note cards this week?
For sure. Yeah, we're going to do tariffs. We're going to do a lot of the show today. We're going to go to it, Wendy, but I'm going to start on tariffs as well. And the way I thought of starting was sort of three ways this week shows how different Trump 2.0 is from them. So here's my three ways on my note card. Trump is different. The world is different, and most importantly, we are different. So those are sort of a lot of ways that things are different here.
Ben, did you put that all on one note card?
I see. It's not my first rodeo. I put it on two because they bleed.
Oh, very efficient. Okay, yeah.
This has all been planned. This is my whole morning was to plan that move out.
Good budgeting skills.
But quickly on those three, Trump is different because we really have a kind of ready, fire, aim approach to tariffs here. We're seeing it's different kinds of tariffs. These are blanket tariffs. He goes on them big. These China ones are big, and this is kind of a different sort of set of tariffs than even he did in his first term, which were focused on specific duties. And there's a focus on blanket duties across all trading partners. His pick per trade representative confirmed this week as well that that's going to be studied, and that's potentially on the docket. China and the rest of the world is different as well, and this is an important element here too because they've had years to plan for their retaliations. They were, as sort of rapid as Trump was in 1.0, the countries were trying to figure out ways to respond. They've been really thinking about this hard, and we saw a lot of really kind of novel approaches to response here that I think will change the back and forth here. China's talking about linking tariffs to Google and NVIDIA and probes they have in there. Canada's going specifically after things like Florida orange juice and Tennessee whiskey. Obviously, lawmakers in those states are going to really care and they're going to call the White House. And then Mexico's doing a bunch of threats as well. One thing I picked up in my conversations this week was a concept of carousel tariffs, which is tariffs that kind of go on different goods on different months. So obviously, if you're an importer, you really care about that.
Jesus.
And then the last one, I'll toss it to you, Rick, because you wrote about this really nicely, is that we're different. That American consumers are really focused on prices. Inflation wasn't the top of mind 4-6 years ago, but they really is now. So any changes we see here in prices are going to be really noted on by Americans, which the White House will be watching for certain.
Ben, I think weren't tariffs on your note cards last week? And
yeah,
the week before that,
it's the same.
I mean, don't we have anything else to talk about?
Not going away.
I guess we don't. I mean, is this what this is what we've been talking about all week on Yahoo Finance, right? That's a good breakdown, Ben. I would add a couple other things. First of all, what's different this time is Trump is doing this much sooner in his term, and he's also blinking much sooner in his term. So, and this gets to the question that I've been probing recently, which is which of these tariffs are actually going to stick, and which of them are just negotiating ploys that Trump is probably going to get something for his trouble, and then maybe he's not going to be talking about tariffs. So here's the handicapping I've seen so far: the tariffs on China are probably here to stay. So that was a 10% tariff on, I think, basically all imports from China. That's about, call it, let's say, $450 billion worth of stuff per year. The threatened and then withdrawn 25% tariffs on imports from Canada and Mexico, maybe not. Maybe those are not actually going to go into effect, and there are some reasons to think not. First of all, that would be a lot more pain for U.S. consumers than 10% tariffs on Chinese imports. That's a lot of food from Mexico. Just as Americans are trying to get over food inflation, it would create chaos in the automotive industry with the supply chain and things like that. And Trump has signaled that he wants something for those for that tariff threat. It's fentanyl assistance and it's immigration assistance. So we've got other tariffs coming down the road. Just quickly, this universal baseline tariff, which might be 5% or 10% on all imported goods, or most of them anyway, that is probably going to be a keeper. And one of the reasons for that is Trump needs new sources of revenue to finance his tax cuts coming later this year. So that's the analysis I've been seeing. Ben, I have a feeling tariffs are going to be on your note card next week, maybe the week after that. I mean, I think we all wish we had something else to talk about, but here we are, the tariff geeks for the time being.
Yeah, they certainly keep coming up. And as you guys know, I'm primarily focused on financial markets and the reaction we're seeing from investors. And it's been fascinating to hear from Treasury Secretary Scott Bessent this week talking about the importance of keeping the 10-year Treasury yield low. Guys, interrupt me if I get a little too wonky here. I'm trusting you to keep
This
me
is the
honest.
home of wonks.
Make me
You're in
sound
the right
normal.
place.
Make me sound relatable to the kids out there listening. I'm going to try to break this down in a way that's digestible. So basically, the takeaway here is that the Trump administration wants interest rates to be low. That's not necessarily surprising when you've got a real estate mogul in the White House, right? He wants mortgage rates low. So how are they going to do it? One anticipated idea was to try and control the Federal Reserve. That's what Trump talked about on the campaign trail. But now he has since rolled that back. It is very important to democracies to have an independent central bank. Now we have Treasury Secretary Scott Bessent saying they can control interest rates through the yield on the 10-year note specifically. What's challenging there is that the market will price in higher yields if the market thinks that inflation is going to be higher for longer. Guess what the market thinks is going to be inflationary?
Yeah,
Tariffs.
that's right.
So that is pushing up yields. We didn't see that right after Scott Bessent made these comments about the 10-year yield going lower, but around the entire world, not just in the U.S., we've seen inflation expectations ticking up, in part due to the reaction to these potential tariff policies. So it's going to be interesting to see how Bessent and Trump work together along with Howard Lutnick and the rest of the administration to try and strategize to prevent their policies from lifting 10-year Treasury yields and therefore interest rates.
Right. So I think that is actually somewhat encouraging because the interest rate that matters to almost everybody is not the short-term rates that the Fed sets, which mainly just affect short-term bank deposits. It is the 10-year Treasury, which basically is the benchmark for all consumer and business interest rates, mortgage rates, car loans, business loans. And Trump himself actually said after the Federal Reserve recently said we're not going to change interest rates in January. Trump actually said, to my surprise, and I would bet yours too, Ben, he said. Later, he said that actually seemed like the right thing to do. And I was like, wait a minute, this guy hates Jay Powell. We always thought he was going to try to fire Jay Powell. And here he is giving Jay Powell a break. Now, to flip this around, the president doesn't get to control long-term interest rates. The market decides. And right now, as you pointed out, Maddie, the markets don't like tariffs and they don't like Trump's deportation plans because, if anything, those would push prices up, not down. And that affects interest rates by pushing them up a little bit more. But, you know, this is different from what we heard from Donald Trump the first time around when he was always going after Jay Powell when interest rates were not low enough.
Yeah, that's the part of this that I was curious about, Maddie, if there's any market to this, because what I can't parse out here is how much of this is a sense that he can do anything, that Bessent can do anything on the 10-year, versus just a sign that he's going to lay off Powell and is going to sort of leave the Fed alone, at least for the time being, him and Trump. Do you get any sense from the kind of early market reaction to that, which side of that the investors are focused on, or is it both?
Well, it's been interesting because we know that there's this idea of a shadow Fed chair that's already been in place, but and not to get too wonky here, but there's been this question mark about whether or not we're going to see additional Treasury issuance from Scott Bessent under his tenure. This is something that Janet Yellen got a lot of pushback for, and so it would be interesting if they went about their attempts to keep the 10-year yield low through that same method. I think what's been interesting more broadly, though, to your question, is that we haven't necessarily seen investors pricing in the potential impact of tariffs as much as I would have thought that they would. And we've especially seen this playing out in the currency market. If you take a look at the change that we've seen in the peso and the Canadian loonie and even in the yuan, they haven't repriced the impact of tariffs as much as you might think, given the degree of those potential policy changes.
Let's dig into that for a second, because before Trump took office, I wrote one of our preview stories for what markets were expecting with regard to tariffs. And there was tons of analysis that said, okay, we're aware of what Trump has threatened. We don't think it's going to be nearly as bad as what he has threatened. And guess what? Markets so far have been right about that. So just a couple examples. Trump, while campaigning, said he was interested in a 60% tariff on Chinese imports. And what we've got now is 10%, and Trump has basically stopped talking about a 60% tariff. And markets anticipated that it wouldn't be as worse as Trump said. And Trump threatened with a date certain to impose these tariffs on Canada and Mexico, and then broke that off within, just hours before that deadline was. Now, at any moment, this could get worse, but I think Trump has indicated that he has a red line for tariffs. I mean, when the day that those before the Canada and Mexico tariffs were supposed to go into effect, what did the markets go down about a percentage and a half? Or
it wasn't
maybe
much.
2 points.
It's not like we saw a sell off.
There was a sell off, but it wasn't a huge one.
Or
and then Trump,
right.
Suddenly had a deal to avert the tariffs. So
Yeah.
We do know he is sensitive to what happens in the stock market, and he may have showed his hand there a little bit.
Right. Well, it's going to be interesting to continue to monitor whether or not we need to. I keep asking guests, do we need to take Trump seriously or literally on tariffs? And so I will continue to ask those questions. We are going to take a quick break here at Capital Gains. We're going to be right back with Wendy Cutler and more Capital Gains right after this. Welcome back to Capital Gains. We are now joined by Asia Society Policy Institute Vice President Wendy Cutler, and we're continuing our conversation on tariffs. Wendy, great to have you on. Thanks for making the time. I just want to start on where you see this relationship and tit for tat over tariffs, specifically with China, heading. Obviously, we rely so much on China for a lot of the goods that we're constantly overbuying here in the U.S. Are we still going to be getting things shipped to us within 24 hours from China in the next 5 years? What is that going to look like?
Well, first, I think China was very measured in its response to the Trump 10% tariffs. It increased tariffs on certain products, but not our most politically sensitive products. It also announced an anti-monopoly investigation against Google, as well as it announced it's going to withhold some critical minerals. But in total, the package is pretty measured, but it does send a signal that China's had a lot of time to prepare for this, as said in the earlier segment, and it is signaling that it is going to take a menu approach towards retaliation against the United States. It's not going to be all tariffs. They're going to be combining other measures that will hurt us over time. But clearly in their response, I think they were signaling they do not want an escalation of this trade war. And I don't think it's out of the question that at some point we may be at a negotiating table with China trying to negotiate a phase 2 trade agreement.
Wendy, do you see this more as just in the broader picture, let's say a few years from now, are we just sort of resetting the terms of trade with China? Because there has been this argument about whether we should just sort of fiddle around the margins with the way we do trade with China or decouple from China. In other words, really dramatically change our trade relationship and buy a lot less stuff from China. So where do you see this going?
Well, look, right now we trade about $600 billion worth of goods with China. And so to try to unwind that anytime soon is going to be impossible. But I'm not convinced that that's the strategy. I think it's more strategic decoupling in products that are important for either economic security reasons or medical products, kind of what we call like essential products. And products like that, we don't want to be dependent on China. So we will make efforts to decouple and to work more with like-minded countries to build alternative supply chains. But with respect to many other products that go back and forth, I would expect that they will continue, albeit maybe with tariffs in place.
I mean, dare I suggest that what you just described is really just kind of a continuation of Joe Biden's policy toward China? It doesn't sound that dramatically different.
Look, it's too early to judge. When Biden went forward with tariffs towards the end of his administration, he was very selective and only increased tariffs on maybe 20 products. Trump is taking this universal take no prisoner approach when he to date, when imposing tariffs. Whether this changes over time, we'll see. So again, I don't want to make any predictions, but I think both presidents are confronted with a China that is not trading fairly, that is dumping its excess industrial capacity all around the world, and is a state-led economy that doesn't really play by the international trading rules.
Wendy, you mentioned the phase two, the possibility of phase two talks coming down the pipe. Curious kind of how you see the events this week leading that. Is a way to view what's going on this week a prelude to negotiations there? And does sort of what we've seen with these 10% duties make those talks more or less likely in your mind?
Yeah, so, in noting how Trump has been talking about China the past few weeks, clearly he's taken a more conciliatory tone, really directing a lot of his ire and retribution towards Canada and Mexico, our neighbors. And I think during, the early days of Trump's announcement of these tariffs, I think China was laying low and Beijing liked the attention being elsewhere. So again, I think that attention will move to China, but I also believe that Trump likes to do what others tell him can't be done. And he loved that phase one trade agreement, albeit it wasn't implemented entirely. And I think the Trump administration is going to squeeze China to fully implement that agreement. But again, I don't think it's out of the question that we may find a negotiating route with China, something that Biden wasn't really interested in. He didn't believe we could achieve a meaningful agreement with China.
And Wendy, looking at the US China relationship from a markets perspective, one of the things that's really shaken markets over the last few weeks is this rolling out of DeepSeek and the AI that China was able to produce for so much cheaper than companies like OpenAI have been able to produce AI here in the United States. And I wonder what that example tells you just about this pattern of China being able to produce more for less, and how, if at all, the U.S. can kind of survive a decoupling with China without risking inflation, both in the terms of technology we may be importing from China and also, of course, goods and other services.
Well, it's just like after COVID, it was a wake-up call for us when we started seeing all these electric vehicles that China was making, which are now flooding the world. And, the Chinese automaker is soon to be the number one global automaker. So I think we're going to continue to see kind of, these big technology, new product announcements like DeepSeek by China. And I think it's a wake-up call to the United States that we can't just be directing our policies towards hitting China or closing our market. We really need to be focusing on how we are going to be more competitive in the world going forward in all of these technologies. And frankly, learn from China as well, because clearly they're making some important technological innovations.
So, Wendy, we're talking about Donald Trump's trade agenda here. I want to sort of back this out and ask a broader question, which is, I mean, who knows if Trump is right about any of this? The basic question is, do we have a problem with trade or not? I mean, is Trump fixing trying to address a real problem, or is it a made-up problem? And, there has been a lot of research at this point about the so-called China shock, the effect it has had on jobs here in the United States, decline of some parts of manufacturing. But manufacturing also is a relatively small part of, what's mainly a service economy. So what is the problem here? Is there even a problem?
Yeah, I mean, I think there is a problem. I'm not convinced that Trump is trying to address it the correct way. But, we have a China that's in the huge player in the international trading system. Its trade surplus this year neared $1 trillion. So there is great imbalances, not only with the United States, but all over the world. And interestingly enough, we're seeing many countries beyond the U.S., Europe, and Canada putting restrictions in against Chinese imports. There is a real concern globally that China, without any breaks, is just going to keep flooding the market, and industries in our countries can't survive and can't compete because the Chinese companies are subsidized and get unprecedented and long-term financial assistance. So they operate under completely different rules. So yes, I do think there is a problem here. The question is, what's the best way to address it? For me, I think that working with our allies and partners to address the China challenges is critical. So out of the box, going after our two neighbors who have been, good partners on the trade front largely. There are things to address with them for sure. Is something that maybe wasn't. Maybe I would just disagree with that move.
Mhm. One other element, Wendy, of your writing that I've noticed in terms of the relationship with China is the word discipline from the White House. The kind of whether Trump can sort of have the discipline to kind of keep up on this and unwind so many of these issues that you laid out. I think your point about the Canada and Mexico being sort of a distraction, but what's your sense of sort of Trump's discipline towards China at this point? Is it something he's going to see through, or is it going to be kind of a back and forth that may not get at the underlying issues?
Yeah, so we all know, Trump's style can be very impulsive, very chaotic, and some say that's all deliberate. But let's remember, China is in for the long game, so they know what they're doing, and they have a strategy, they have a vision, which largely is to become the most competitive country in key technological sectors and other important sectors to the economy. And so it's important that, we also develop a strategy and a vision, know where we're going, and not just take short-term measures one week and then the next week do something completely different. So I think discipline is needed, particularly when dealing with a country like China.
Thank you so much, Wendy. We really appreciate it. We are out of time, but really appreciate you joining us again, Wendy. And that is going to be it for Capital Gains. But thank you to Wendy, Rick, and Ben, my co-hosts, for being here. And thank you all for joining us. Make sure to like and subscribe to Capital Gains wherever you get your podcasts. Until then, we'll see you next on Yahoo Finance.